Hello, you're watching Smart Money with me, Alishia Seckam, and today Peter Armitage, CEO of Anchor Capital, joins us to chat about some of the lessons he's learned when it comes to investing smartly as far as building and growing a business goes. But Peter, let's go back long before Anchor Capital. Did you always boast an investor savvy that saw you launch a career in global financial markets, landing you where you are today?
Yeah, I got interested in investment markets when I was about 25. I lived in Durban, so Durban is more about the sun and the beach and the having fun. But then, once I learned about the stock markets, the joy of investing 100 Rand and it goes to 200 Rand, I really got hooked in it. And the rest of it is history.
Well, you've come a long way since then, right? Because you've been rated as the top investment analyst in the annual Financial Mail rankings at a record 21 times. What's the view like from there now?
Yeah, obviously awards and accolades are very cool. But in our game, it's a bit like a restaurant. You're only as good as your last meal. So clients are always looking at us and judging what we've done in the last 12 or 24, 36 months. But it's nice to know that, what you do is recognized, and it's great. But my colleagues at work often, when I make a bad call or a share doesn't work, they tell me that they're taking one of those awards away. And one of my colleagues thinks that I'm down to 1 or 2 awards.
I ask you that question because, one wonders if it was that recognition that bolstered your confidence in the first place, to in 2012, after working at many of South Africa's top financial institutions, to go your own way and found Anchor Group, or was it always part of your plan?
Well, I think, in order to take a step and start a business, you've got to have a very, kind of specific kind of drive and energy and desire, an ability to kind of go over bumps and just keep on going and keep your eyes on the horizon. But you've also got to have confidence in yourself. And obviously, if others have voted and, given you the thumbs up, that certainly does give you the confidence that you can take on anybody and take on the world. And in the game that we're in, it really is taking on the world. All the big global firms are in South Africa. Clients, we tell our high net worth clients that they're global citizens. South Africa should just be a small part of the investment universe. And if that's the case, then you're competing with JP Morgan and Merrill Lynch and Goldman Sachs and the like. So it's a fun game.
Talk us through some of the challenges, Peter, you've had to tackle head on along the way, on this journey. And what advice do you have for people who are thinking of following in your footsteps and competing against those global contenders?
So the challenges are, I guess a lot of them are normal startup business ones. About 12 years ago, you've got to pay your salaries. And the biggest challenge is always, you know that the secret of business is having the best people. Often the best people are quite expensive. And making that call as to when to, income statement's looking good and you hire 3 or 4 more good people and it destroys your profit for a year. Kind of balancing out the growth and the investment and kind of seeing it through. We are luckily in a business and an industry that generates cash. And when I say that, so money doesn't get tied up in stock and debtors. I've got some mates who are running very successful businesses, but they don't get much cash out because it's as they're growing, the wealth goes on the shelves or in the debtors book. So that is an advantage in our type of game. And then, I guess along the way, by and large, we pick the right people, but certain people disappoint you. One of the lessons is to deal with that quickly. Follow your gut feel is one of my top 5 pieces of advice I'd give anybody starting a business and running a business. Often you feel a certain way and you're not really sure why, but it's years of experience all synthesizing into one signal into your head. And often just doing that saved a bit of heartache over a year or two trying to be patient with people or things. And it's, just keeping to good business principles and treating people like they would like to be treated. And I think the biggest thing is don't even start to embark on a business unless you've got the energy. I always just say we're in an industry where we've got 10,000 competitors of some type this year. financial advisors, asset managers, etc. And we've risen above the average company in that space through a combination of two things. One is energy, and the second one is caliber. So you can have all the energy in the world. I could have a lot of energy for a 100-meter race, but I'm still never going to come in the top three. So pick what you're good at and have the best people. And I think one of the luxuries and one of the things I've really enjoyed is building up a team from scratch. So there's no dead wood. Everybody in our business has been handpicked over the course of the last 10 years. And then if you've got to add a lot of energy to that and to overcome every single hurdle as it comes along.
Well, Peter, following a combination of those philosophies has certainly held you in good stead, right? As things stand, you've built Anchor Group into a 120 billion rand global investment management and wealth business. You're sitting with over 15,000 clients at this stage. And along the way, you've had to make critical decisions. So I want to know, was it instinct or clear intent and strategy that saw you list the business in 2014 and then delist it from the JSE in 2021? And what difference has that decision made for Anchor Capital?
Well, listing the business was a dream and something that couldn't have been, couldn't have put us more on the map. So, I mean, the journey and the timing is very much related to the valuation of mid and small caps on the JSE. Back when we listed, investors were very happy to pay prices well into the future. We listed a share at R1.80 and it went to 18 Rand. In fact, that was a problem because the business certainly wasn't worth 10 times more, and there was a little bit too much euphoria. So investors who invested at R1.80, if you kept it until the delisting, you got a return of 24% per annum. But obviously, investors who came in at 15 Rand had an unpleasant experience. And that's one of the issues with listing, is you can't control where the share price goes. In 2021, the valuation of all smaller companies in the JSE had absolutely tumbled. So our share price was trading at a level that we thought was very attractive. We were very confident in our business. So we borrowed a few $100 million from RMB and bought back the minorities who were happy to sell us the shares. We didn't force anybody to get out of the business. And a few years later, we paid it all back. So, it worked out very well. Along the way, you've just got to make sure that you treated shareholders fairly along the way, which is why quite uniquely, I think, when we delisted, we allowed everybody who wanted to stay in and share in the future spoils of the business.
Absolutely. Well, it speaks to the kind of decision making that you've got to make as the business grows and, suitable decisions for the time, right? Last year, Anchor Capital merged with the UK-based wealth manager Credo, and you've now created a wealth and asset management business that's worth 230 billion Rand in assets under management. So why that decision, and how has it now helped your clients in the current context?
So, Alishia, South Africa is less than 1% of the global investment world. So, we're doing very well here and picking up nice clients, but it's a fraction of the opportunity set out there on the globe. The UK is a natural place for us to move to. A lot of our clients are moving there. A lot of them are very comfortable as a jurisdiction. We don't want to play around with, let's just say the UK is a very credible investment destination, and people are comfortable with having their funds and money there. So twofold: one, for our clients, it gives them, kind of a UK base, and for South African clients. And then secondly, we're very ambitious. To grow to 500 billion Rand in the South African market would make us the biggest wealth manager in the country. To give you an indication of size. So, and the UK is 30 times that size. So we want to put our energy and our caliber and the things we've learned here into a market that's of a much bigger size. And we do live in an investment world. So, what we'll propose to a client in the UK is probably quite similar to what we'll propose here. So it's not an entirely different, the investment mindset and product offering will be quite similar. But it's, the client and the jurisdiction and the regulation there that matters. Yeah, so just arriving in the UK with a briefcase saying, hi, I'm Pete from Anchor Capital in South Africa, I think would be quite a challenge, and it would take a long, 5 to 10 years to establish a proper business. So we were prepared to, kind of write out a check for R1 billion and get 5 years ahead and get stuck into that market as well.
Peter, you talk about, the kind of impact this has on the trajectory for your business and growth as you see it. On the other side of the coin, to what extent does this speak to how you're feeling, how your clients are feeling about investing in South Africa right now?
Yeah, so I think guys do want to diversify globally. There is a lot of anti-South Africa sentiment. And, like I said, South Africa is 1% of the investment world. And a lot of it is just about choice and diversification and not just how we might be feeling about South African economic growth. Mm-hmm. So if you want to invest in the tech sector in South Africa, you choose Naspers or Prosus, which are effectively the same business. If you take your money offshore, we analyze very closely 100 incredible tech businesses. So you've just got so much more choice and ability to diversify. There's effectively about 60, 65 shares on the South African market that we would take serious weights in people's SA portfolios. Offshore, that's in the thousands. You can still build a pretty decent portfolio in the South African market. A lot of the shares in the SA market are international businesses. And you can earn a lot of money in fixed income and interest here. So there's still, there's places for South African assets, but for a global investment citizen, South Africa would be a small part of that.
Okay, so bottom line, what's your long-term vision for Anchor Capital?
So I think in an interview a few years ago when we were at 50 billion rand, I said we'd get to 500 billion by 2030, and people chuckled at us. Now we're halfway there, so I'm going to move that 2030 back to 2027. I think size is nice, and it's always great to have the headlines. But we love our business because we change people's lives in terms of investment and saving and helping them get on the right path. From an AUM perspective, we want to take that over 10 years to R1 trillion in assets. That's 4 times the size we are today. But to keep on getting people investment returns and helping people along the way. I think we're staying in our core business by going to the UK and embarking there. If we stayed in South Africa, we'd probably have to diversify, kind of horizontally a lot more because of the market size. So we know what we're good at, and we want to do more of that to more people in more countries.
Well, Peter, best of luck to you as you venture forward. Peter Armitage is CEO of Anchor Capital.